On December 9th, 2025, something absolutely incredible happened in the silver market. A number flashed across the screens that for so many years felt like it was just a fantasy. It was a moment that basically validated everything an entire community of investors has been believing in with some serious conviction.
And there it is, $61.44. Now, you have to understand, that was the intraday high. Silver didn't just kind of knock on the door of $60. Oh no, it blew the door clean off its hinges. We're talking about a blistering 5% surge, a move that sent shockwaves rippling through the whole financial system. This wasn't some polite, gradual climb. This was a loud, clear, we're here kind of statement.
Chris Marcus from Arcadia Economics just captured it perfectly. What we all saw, it wasn't just another day at the office for traders. It was a moment of pure vindication for a whole community that has been waiting and waiting patiently for this exact day to come. To really, truly understand why this price explosion is such a massive deal, you have to get the backstory. I mean, it's a story about a market that has been, for all intents and purposes, fundamentally broken for decades.
For years, and I mean years, silver was deliberately kept down. You've heard the nickname, right? Poor man's gold. It was a pretty clever label, actually, designed to keep the price artificially low. And all the while, you had these massive paper short positions just waiting to crush any rally before it could even get its legs under it.
But here's the thing about reality, physical reality. It always wins in the end. The real-world demand for electric vehicles, from solar panels, from the entire AI revolution, has been eating up every single ounce it can find. This created these huge global supply deficits, and inventories in London and China got critically low. You just can't paper over that. And now you have the Fed basically screaming from the rooftops that they're going to cut rates. That's not just fuel on the fire. That's like backing up a tanker truck of gasoline and dumping it on an inferno.
So, as you can imagine, the people who live and breathe this market every single day, they reacted immediately. And their analysis? Well, it was practically unanimous.
Peter Schiff, he just hit the nail right on the head. He pointed out that the real fireworks started once silver blew past that huge psychological barrier at $50. And then he took this massive shot at the crypto world, pointing out that Bitcoin, which was supposed to be the ultimate hedge, has just gotten crushed by silver. The roles of what's safe and what's speculation, yeah, they've completely flipped.
And this slide right here just lays out Schiff's point perfectly. Just look at that reversal. The run for silver this year has been incredible, and it really highlights this deep fundamental shift in what the market sees as a true safe haven versus just pure speculation.
Gary Savage over at Smart Money Tracker. Wow, he doesn't mince words, does he? He points right at the folks who have been holding the price down, saying they are now totally trapped in a massive short squeeze that is costing them billions. He says their control isn't just slipping, it's shattered. And that kind of financial pain is what forces a real change in how things work.
And okay, this is where it gets really interesting if you're looking for an opportunity. Peter Spina of GoldSeek points out this massive disconnect. The mining companies, especially the smaller ones, are still being priced like silver's under $20 an ounce. He's calling them a screaming buy, basically saying this is where the next huge wave of money could go for some seriously juicy returns.
Now look, this isn't just about a bunch of experts getting all excited. This whole move is backed up by hard, measurable data and some absolutely explosive technical signals on the charts. Okay, one of the biggest indicators we all watch is the gold to silver ratio. It just dropped to 69-1. And for those of you who follow this, you know that's not just a funny number. It's a huge signal that silver is now aggressively outperforming gold. The so-called little brother is now leading the charge.
And the performance numbers for the year just tell the story in undeniable terms. Silver's up 100%. It has more than doubled the fantastic 40% rally we've seen in gold. This, my friends, is a masterclass in silver's explosive leverage when a real precious metals bull market finally decides to kick into high gear.
But you know what's really staggering? The speed. It took just 12 days for silver to jump from $50 to $60, a $10 leap in 12 days. The implication there is pretty obvious, isn't it? The next $10 jump could happen even faster as this momentum just keeps building and building.
And all this momentum is backed by a huge wave of chatter online. Posts from major voices are getting tens of thousands of views in just hours. But you know what the most telling detail is? The other side of the argument, it's gone completely silent. We looked, we found zero counter arguments.
When that happens, it's a very, very powerful sign of one-sided conviction in the market.
So this all leads to the big question. The old system is shattered, the momentum is undeniable, so where do we go from here? Well, the analysts are not holding back.
The technical analysts have basically drawn us a map. Rashad Hajiv saw that gold-silver ratio break is the trigger. Next stop, $63, then $70. Jesse Colombo's looking at a classic bull flag pattern on the chart that points to a target of 72, and looking a little further out, Bald Guy Money sees a clear path to a new trading range somewhere between $80 and $100. And then you've got Mark Toburn, who's even bolder. He sees a clear path to triple-digit silver. That's over $100 an ounce within the next year. And he ties it directly to the collapse of that old price control system. He argues that as the paper traders are forced to run for the exits, there's just nothing left to hold it back.
Now, this is really interesting. Check out this historical comparison from SRS Rocco Report. Back in 1980, 1 ounce of silver could buy you 1 barrel of oil. Simple as that. If that relationship just returned to normal today, silver's price would have to hit $93 just to match the current price of oil. It kind of suggests that even after this insane run, silver is still fundamentally cheap.
And finally, look who's waking up and smelling the coffee. The mainstream is catching on. The big institutional reports are now confirming the exact same things that silver stackers have been saying for years. Bloomberg's talking about the Fed, Reuters is confirming the supply crunch, and get this? TD Securities now admits that $60 is too low to get new mines built. They're literally telling you 60 is cheap. So let's just zoom out for a second. This one day, this single price point, it really does feel like the dawn of a new era for real physical assets. It's a sign of a deep psychological shift in how the market values something you can hold in your hand versus a currency that can be printed into oblivion. The fundamentals are there, the technicals look explosive, and the experts are all singing the same song. The map has been laid out for us. The only question left is, where does it lead from here?